Have windows in order to raise capital throughout the year. However, this year, especially after 2 years of lingering and very dramatic moves, you've seen some green shoots emerging and then good news piling on. Over the summer, everyone got a bit scared early in August, but good news kept trickling in. So we really think that last window of the year would be a good one for companies to get that fundraising cycle going.
And just who from is the interesting point here, because the VC world has been very, very dominant when it comes to startups, technology world, and that's from the United States to Europe. But you're pointing out to us there's been a blurring the lines now where private equity is crowding into the space. Just how different a proposition is private equity now as we talk about funding?
It is a very interesting times. I think we're very early, so it's still all information. What we see is VCs are going more senior, more mature in terms of their investments, and PE are joining them in that same growth equity category. We've seen the like of Balderton, Atomico make news in the past couple of weeks about going into that sector. We've seen over the past few years the likes of Vandal, Carlyle, PSG make investment in that sector. I think PE comes with a longer track record as a class, with more investments, and they come with more demands simply. They're used to more mature company, and they bring those demands into companies that have been used to probably bit less mature requirements, and it's only raising the bar for everyone. I think it's a good thing. Even VCs have increased their demands in terms of due diligence, and PEs coming into the game, I think, can only help, especially in Europe, make the asset more distinctive versus the US.
This is brilliant, and what a brilliant question, because I expected what the answer was, yes, the private equity is going into the VC space, and what you're saying is now the VC is also going into the private equity space as well. So you've got this blurring of that clear older delineation. And the FOMO on both sides,
yeah.
you know. But it says to me a reality that the venture capital is not making the returns as quickly as it hoped to. Hence, it has to go for longer term holdings like private equity does. Private equity is worried it's missing out on all these aggressive startups and the potential profit there. But herein lies the problem, I guess, especially for the private equity side of things as well. They like making money out of all their deals.
Yeah.
Private equity does not like a punt on 8 or 9 out of 10. Venture capital is built on 10 punts, 2 of them exponential, going X on this, 10X on them, what have you. And therein lies the difference. So I guess my question to you is, I mean, many questions, but private equity is inherently then becoming riskier and venture capital potentially becoming safer because of that blurring.
I would say no, it's just giving more options, which is great.
Really?
Because different companies.
You make 11% annualized return in private equity over a 23-year period out of all your investments. But now you're going to VC world and you're expecting to make those kind of returns on every deal?
It's not exactly VC world. It's the growth equity. So companies who they invest have already a steady growth in their revenue. They've demonstrated early unit economics. So you're not quite as much shooting in the dark and making bets as in earlier VCs. And PE bring that just extra complementarity of options for companies when they choose who they want to go with for the next 3-5 years.
And this was a point we were talking about the other week, how quickly some of the companies are getting to a run rate now. It's much quicker than it would have been in the past, which is why I guess no doubt it appeals to private equity. Can I get into what we're seeing in terms of this week? Because a Fed rate cut is widely anticipated. How big a difference is that making in startup universe?
It will help funding. We know that it blocked things a little bit, and it's been the start of that freeze in the market in terms of exits. And you know, if it will help exits come back, it will help investor be a little bit more keen to allocate that capital they've been holding to. And with just that few good news that start piling on, I think it's just good momentum, you know, slowly but steadily building on.
Okay, so the